Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald and you're joining us for another exclusive interview here in the Geneva studio. Up next we've got some dollar talk. I'm joined by Yves Perréard of Perréard Partners. Yves, thank you so much for popping in today.
Thank you, Nat.
Okay, so firstly, why did the US dollar have such a weak start to 2014?
Well, there are many reasons besides the weak start of the US dollar beginning of 2014. One of the main reasons we see, I would say, as the expectation was the market was expecting a little bit too much in terms of Fed tightening, which is one thing. Then the market positioning was already there in November and October last year. So people were already positioned in the US dollars. And then you have to take into account the capital flows from the US toward Europe. All those factors made the US dollar a little bit weak, and on top of that, the global macro pictures from the US didn't come as expected by the market. Don't forget that in the US we had a very bad winter there, starting in January. Last year as well, the dollar was quite weak as well in March and April, because the people kept their position in January, February. Then they wanted to have a confirmation from the non-farm payroll or other numbers in March. Didn't came, and then the dollar went down in March and April. Last year as well, and we had the same kind of patterns this year.
What then sparked the greenback's rebound? Is it simply the dollar's safe haven status which has allowed it to continue to strengthen, or is there something more within that?
Yes, state haven status, I think, doesn't play any major role anymore for the US dollar for me. For me, the global macro pictures came back. First thing, we saw the numbers. GDP was very bad for the first quarter, but a good number came at the end of March and the beginning of April. Don't forget that the market was expecting non-farm payroll to have above 200,000 jobs on a monthly basis. We had between 150 and 170 for the first 3 months, and then suddenly, it came. PMI came as well, inflation came gently as well, and PPI. So I think global macro pictures came, and then suddenly we have the strong talk from ECB, Draghi, and the other governor of the ECB came in March and April.
You touched on already, last April being poor, and this does form sort of part of a cyclical trend that we've seen over the last 5 years, that April is a poor performing month for the US dollar. Certainly this year was very much the same, as you had a string of poor economic data out of the US continue to weigh on the buck. As we reach the end of May, heading into June now, have we seen the dollar get back on track, as it were, with this whole dollar rebound, or is there sort of a greater picture, a greater slowdown going on?
No, I think the market expectations are still intact, but still we need to know some economic numbers and some strong ECB commitment towards the monetary policy in order to have the dollar getting stronger. Don't forget, the dollar didn't move. The volatility is low for all the asset class for the last 15 years. We haven't have a range, such a small range from beginning of the year in euro dollar for the last 15 years. We started the year at 137.5, where we're above 136. We went above 140, and in terms of volatility as well. I think the numbers are two things. First thing, the ECB changed the policy dramatically. Remember, 6 months ago, nobody was speaking about negative interest rates, and eventually as well sovereign bonds back. So if ECB is going to commit and are going to do something in June and doing another policy change as well, let's do in September by buying sovereign bonds, I think then the euro dollar will go down and the dollar will strengthen step by step, which is one thing. First things, and on top of that, we speak about the volume of the foreign exchange. Don't forget that all the IMF and BIS number were speaking about $5.3 trillion a day. I'm sure that those numbers have been collapsing for the last 6 months.
So you've spoken about sort of dollar price performance so far and the drivers there. So let's put this discussion into practice a little bit. We've got dollar yen here. Where are you pitching this pair, for example, coming into sort of the medium term?
Alors, the next, medium term, let's speak about till end of the year. I don't expect too much on dollar yen because I think the story of dollar yen was in 2013, not in 2014. Expectation were in 2011 and 12 when we reached 76, 77 in dollar yen. Then we have the monetary easing from the Bank of Japan. Then you have the stock market as well, the Nikkei. What we have seen in 2014 is capital repatriation from pension funds and life insurance in Japan. And dollar yen volatility collapsing totally. The range bound in dollar yen between 101 and 104. And I don't expect anything in dollar yen. I'm not the guy who is expecting 115 this year in dollar yen. Even if the euro dollars is going, let's do, between 120, 125 and 130, I see rather dollar yen go step by step toward 105, 107. I don't see 115. I think this story has been for 2013. First thing, the market is still positioned, short yen against everything. I rather will play myself a short euro yen position than a long dollar yen.
Yves, thank you so much for coming in and sharing your insight. We hope to see you again soon. Thank you very much.
Thank you very much.
Want more exclusive interviews with market insiders? Then stay tuned to Dukascopy TV. From me though, it's goodbye for now.